Officially, good morning. Happy Sunday. Welcome to the Options Income Launchpad Sunday Market Insights. I'm Scott. I'll be your host. So first and foremost, I'm going to tell you this because I'm going to share my frustration with you so that you can process it in your frustration. Some of you have probably met Gary. Gary contributes to the trade alerts. Gary will sometimes pop in to help out with meetings. But anyway, he said, so if you look at the schedule, we're missing some meetings this week. I'm trying to get the schedule. I like to get 6 months on there in advance. And so if you got hit with emails yesterday, I spent hours. I'm actually talking to two different models of AI, looking through the help that they have. They don't have a lot of good like live actual help. And so I literally scheduled one meeting, just one, with 26 instances. So Doug, are you saying you got 200 emails from that one meeting? They all said the same thing about that one meeting? So tell me, if you got blasted with emails, 59. I mean, it's baffling to me. I'll send another email out as well. Like, I'm sorry. 75, how? 75, how? I scheduled one meeting with 26 instances. And so there's 75, 59, and 0. Like, it's just this baffling, inconsistent. Greg didn't get any. Tony got 10. Like, this doesn't make any sense. I don't understand. I turned off the publishing notification is what it said. I'm like, oh, okay. Turn this off. I still wanted to give, the hourly reminder, and so it was a different setting, but it's like nothing changed. I was like, so weird. Oh, Craig's the only one who actually got 26. That doesn't, how is there... Oh, okay. Welcome to the frustration. I am sorry. Well, that should be at least, right, Sarah? Like, if anything made sense, Craig getting 26, one for each week. They're supposed to send the week off, but if it was going to mess up and do anything, where is 75 coming from? 50, 10. It just doesn't make sense. Like, it's like if there was some like breadcrumb of an error that I could trace back to be like, oh, this is why. The date the emails came was Feb 24th. Oh, that was the last one then. This would have been just last night. 11 p.m. Eastern, apparently. 59 emails. 26. Holy shit. Oh, I'm going to have to force them to get on the phone with me. So I only did the one, so at least, let's see. Let's pop in here. Disclaimers. You know them. Education Illustrative. We're not brokers. We're not advisors. We don't give advice. Decisions made at your own risk. Yada, yada, yada. Melody got dozens. Oh, I'm so sorry, you guys. I tried so hard. I spent hours on my Saturday trying to get it right. Pulling my hair out. I'm committed to getting it right. So I'm sorry, you guys. Forgive me. Can we still be best friends? That's the only question I have. Yes or no? Don't say no. If you're gonna say no, don't do it. Just keep it in your mind. Okay. You guys are amazing. Amazing. Let's posture the market. Let's look at the economic calendar. Went into the trash. Good. At least it didn't bug you, Tony. I will get it right, and then I will be able to be like, okay, now we can all be safe again. I'm I have to schedule meetings for this week. I think Thursday and Fridays there's like only the Thursday morning. The Thursday afternoon and or the 2 Thursdays are not on there for right now. So if you're looking and you're wondering, I'm gonna go spend some more time figuring it out. I'll try another one and then I'll talk to you guys and see what happened. So anyways, technology. This is what we'll do, the normal. Let's get to it. And Steven, I was going to try to get that video fixed, but clearly this is what happens is other fires start and it's on the list. You did get blasted, 52. 52 kind of makes sense. That's 26 twice, I guess, right? Like there at least is a multiplier there. so odd. Okay. Let's go posture this market. I need to get some other things ready here. Oh, wait a second. I checked this. I just checked my charts before we got on. Let me make sure that, yeah, okay, we're still good. That's working. Posture's here. That's working. They all went to your spam. Good. Yeah, if they're just going to your spam, let them go to your spam. Don't even worry about it. I'll fix it on my end. If they're hitting you, just like, I think you can click on the sender and then click all and then delete them all at once. Something like that, right? At least to just like purge it. But rest assured, I am trying my very, very hardest. To rectify this situation. What are you working on? We are going to the Oracle and we're starting here. Okay, I like to keep tabs on this. I know Steven loves to do his before and post it. I love that he does it. Who is scoring before and coming like to hear like, hey, how does it seem? Who is scoring real time? I like to score real time because I like to like have my reaction with the group. So this is my market posture. I get to do it with you guys every week. I mean, we always talk about it on Friday. Like, what do we think it'll be? But I'm always shocked. I'm always shocked by how often it changes or is different than what I expected. This week's chart for analysis 03/01/26. Saturday morning, love it. Okay, very cool. The funny thing is, this analysis, is something I used when I coached a lot before there was any group. And okay, yeah, I think that's the easiest one. It's sitting right inside. You can see it actually looks great right now. From a stochastic sense, we've moved into the seller cycle. What have the sellers done? They've pushed it from 696 to 686. It's down less than 2% from the high, but we're possibly down the whole cycle. If it starts to bounce from here, we get a cross on this, bounce off of this into the channel. That's fantastic. That would really help us. Even if it didn't change the score, I would love to see that as like a, hey, we're starting to see some bullish momentum again. February, March, and April tend to be cyclically strong months. That doesn't mean always, but we tend to have more bullishness in the spring. And then you probably have heard the old saying, sell in May and go away. And we tend to see May and June a bit sideways, a little bit of movement, and then sideways. Lot of sideways trends or trendlessness in summer markets. Okay, so that's done. Let's come here. Now, this is where it gets a little more interesting because my score stays the same, but my score is lower. I don't see anything that would cause me to need to change this. It's below the recent highs. It's above recent lows. So to some extent here, this is not something that I'm necessary. Here, let me go paste this into the this week's chart for analysis. 0220. Nope. 03. 0126. Paste. Okay, so for me, short term, I don't know what's going on here. This was last week's. Oh, that's long. Oh, geez, I just did that wrong. Sorry, that was my fault. That was my fault. I screwed that one up. I hate when I do that because now I'm worried I'm going to confuse it. They're very delicate. Yeah, Doug, my wife mentioned that this morning, and I'm like, oh, that's horrible. This week's chart for analysis. So I have something interesting that I noticed, though, in this little mistake. It actually scored this a 0.25, which is funny because that's very close to what I am. Anyways, agreed. There you go. Sending those good feelings. Wait, no, that's not what I wanted here. Yeah, I hope it's a short conflict. I'm not sure what the objectives are by way of, is there a surrender? Is there I'm not sure what capitulation even looks like. Are there stated objectives in this thing? Paste. And okay, so I screwed that up a little bit. This is now the short term. Oh, that's crazy, Steve. Oh, I hope he is safe. So I am going to keep mine at a 0.5. ChatGPT, or the Oracle, is going to drop down to a 1. So a little bit of a dial back. So sorry, I am trying to get myself better oriented for today. That is, for me, 1.75 total, 2.25. Okay, so it pulled back to a 1. Dawn dropped back to a 1. The short-term trend continues to lose momentum. Structure has shifted from higher highs to a sideways to slightly lower pattern. Digestion, maldistribution, follow through stalled. The posture remains modestly bullish but fragile. Okay. I mean, I think that's fair. At least it's made a bit of an adjustment. What I was going to draw here was actually something like this, which is a symmetrical triangle. So it's just a consolidation, but that is a continuous it's a continuation trade, a continuation pattern. That part of what goes into this is what's the context of the price action moving into that, and it was bullish. So that's why I'm okay maintaining a 0.5. ChatGPT's at a 1. That makes sense to me. Okay, so now this is where I think it may be a little interesting. I'm going to move this out of the way. I'll remember to actually go change the chart. And we'll come back in here. So a 1 there. Let's move to volume. Volume this week's chart for analysis. 03, 01, 26. I want to make sure real quickly that I actually have it marked. Okay, so we got close. Interestingly, if you look at the volume, we had 83, averages 85, so it was close, but not quite even average. And if you look here, even if it was above average, this would have been a tie day. A tie day. Why would I say that? Because if you look at it, was only down 0.48. And in order for the sellers or the buyers to get credit, they need to move it at least 0.5%. So by the time this thing got to the very end, it nuzzled it out either way. So not quite volume and not quite enough conviction in even pushing it. Still in line with what we've been seeing. So as much as we've seen a break in the bullishness, we have not seen an acceleration in bearish mentality, defensive alignment. So it's more of a neutral pause than it is anything else. And I think that's something that our market posture has reflected. And that's the way we need to trade. So that means, okay, if you're going to do something bearish, be cautious about it. Don't be aggressively bearish. Be, things like that. Okay. Did I hit enter on my analysis? Okay. Let's see. No new volume. Rolling context. Last week it went to 0. No new initiative from either side. Staying at a 0. I think he's staying at a 0. It's staying at a 0. I was at a minus 0.25. I was at a minus 0.25, and I am going to... So you can see I still have one more. These are starting to get old. But even with those being old, even if I just look at this, I'm still 2, 1, 1. And over here, I'm 2, 0, 1. Whew. Yeah. It is, if I throw this out over here, because it's getting a little stale, this actually to me does equal 0. The question is, do I let this keep it down one more time? Oof, I'm right on the bubble here. Don's at a minus 0.25. Who went neutral? Who's at a 0 for their volume score? I want to see how the group is seeing this thing. Are you seeing it more of a 0? And it's funny because if you look at even the line we would draw, I'm going to draw it with a straight line. It starts here and it ends here. Slightly down. Sideways to slightly down. I'm a little bit thinking like, do I favor it with an increased score organically because the selling is falling off and it never actually mounted anything that broke a support level. In fact, as I say it that way, I'm gonna let the Oracle break my tie. I was like, am I a minus 0.25? Or do I say that the sellers, even when they were able to push it to a negative, they pushed it to a negative and never dropped it more than 3%, 2%. So how much conviction did they really have? And that's what this analysis is all about. Does that make sense? I'm gonna let mine rise to a 0. .75. Let's see here. So I'm gonna go to 0. So I am closer now. Let's see. All right, fair enough. I think that works. Tell me if you agree, disagree. I gotta say, I feel like I've been kind of at the lower end of the scoring lately, and I'm kind of catching up, but at the same time, like, we'll see what this little conflict does. Always interesting to see how it reacts. Okay, so let's get this out. Let's go here. Volume at 0. Okay, Stephen D's there. I like to see when we agree, right? It's a good sanity check, this group. 200. Let me reload to make sure. Okay, what are we seeing here? We still have a nice bullishness, though. Even now, the NASDAQ continues to show signs of struggle. Not at all surprised that when we... let me take a picture of this. Actually, you know what? Give me 1 second. Okay. Major market. This week's charts for analysis. Oh, 03, 01. We've been doing the Oracle for a good amount of time now. We started in October. So what is that? 4 months and change? How is it? Do you find it helpful to get additional perspective that validates or that just kind of brings a consistency analytically that helps to, like, when we read it and confirm things? I don't know. I'm curious what your guys' thoughts are, and if there was a better way that you think we could be leveraging what we do with it. That's one. Let's go now. You guys know how I'm a feedback junkie. I want to know as much as I can on my trading. I want to know as much as I can on, like, the group. If we can't measure it, we can't improve it. Two. Okay, let's talk about this perspective. Great when there's uncertainty, yeah, right. And that's kind of the most important time. When it's easy to read, you're just like, oh, okay, yeah, whatever. It's like when it gets, you're like, I could use a little, a little nudge of sanity that it's not me. It's anyway. It's a good perspective. I agree with that. Russell's strong already. Already, we can see from this perspective the NASDAQ's at the bottom and really testing at the bottom. We now have the Dow second. As that moves, it starts to feel less broad, more defensively shifting. And that's the other hard thing about this. The oracle is sort of like, hey, if technology or small caps, and when they're together is when you can stack the score and get to a 0.75 or a 1. But I gotta say, for me, small caps does not have the same capacity to maintain a leadership role, a catalyst of bullishness, the way that technology does. Small caps don't have the same ability as technology as a sector. And so, anyway, something to think about. Gabe is saying that he wants to drop. It's kind of right. I kind of feel that same thing. I mean, you can see it already here. Let's drop to 66, our most scoreable. And in here, we can still see small caps at the top. Large caps have at least, they're at least stable like everything else. So it's not, I would actually maybe think that staying the same does make sense because everything's just sort of gone sideways. We haven't seen like more bearishness from the NASDAQ and more growth from the Dow. They both have just sort of gone sideways. Sideways at the bottom, sideways at the top for small caps, sideways in the middle for the Dow. That doesn't feel like it's shifting to something different. It feels like it's in the same place of uncertainty, which to me says maybe that orients me towards keeping my score the same. Okay, Craig, I'm gonna plead ignorant and say I'm not really sure what VFR versus IFR for flying is. Is that I'm like yeah, it's exactly the frustration, but I'm so curious I actually want to know. So I'm gonna check my like, have you ever really done that, Scott? Of course I have. Visual flight versus okay. Okay. Yeah. Instruments help, right? Um, Wait, did I hit enter? No, I did not. That's last week's. Let's go finish up. Let's go finish up on the 22. And here, have to trust your instruments because you can't see. Oh, I see what you're saying. Visual means you have both. And instruments means you can't see and only have the instruments. That makes sense. Ooh. It's a 0. What was it last week? 0.5. Ooh, that's a big drop. Which is funny because I was thinking of dropping mine. No, I'm going to leave it one more time. Never mind. That's a big drop. This is a 0.5. Oh, wait a second. Where does it see the Dow overtaking? Just on the 22? The only place the Dow overtook was the 22 day, which is least significant. Small caps still lead on 66. Still worth a 0.5 drop. See, this is where I feel like That's a big drop for something that the logic doesn't actually quite hold water. We got to test the logic here. Stress test the logic. Now it's right back. Now it's back to a 0.5. Ah. But is it weakening? I mean, it's still. Yeah, the logic didn't really make sense to me. I'm gonna leave mine the same. I'm fine with this being the same. I might actually take a little time this week and just like kind of standardize, like, this is what the response should look like. This was last week's. Next week when I ask it, that way it's not like some of these things. I like it when it's, gives it in a certain format. So, okay. But that's fine. Let's go to sector rotation. I think we need to do some searching this week. Just, yeah, right. It's consistent with now, like, because that's a big drop, a half a point drop for nothing really changing, and then the logic didn't really hold. That didn't make sense to me. Okay, let's go a little faster. Let's go just a little bit faster. Let's reload this thing. While that's reloading, I'm going to just take a quick peek at the news so we know what we're looking at this week. Pretty minor. Monday, nothing. Tuesday, some Fed speak, nothing. Wednesday, it's the first week of the month, so it's a jobs report. We've got ADP. Good expectations, but 50's kind of just maintenance. We have beige book, but there's no real expectations from the Fed. Jobless claims still holding at low 200s. We love that. The employment data is expected to drop a little, 130 down to 50, but also have a slight drop in the unemployment rate. Nothing here. As long as there's no like big negative surprises, I think it should just be more interesting than anything. Okay. We now have energy at the top. Industrials second. Materials. Healthcare. And you can see technology's barely holding on, though we also have comm services trying to step in a little bit. Let's get a picture. And sector rotation. This week's chart for analysis. 03, 01, 26. Okay, that's one. Let's drop it to 133. And we'll get a picture of this. What do we have? Energy. That the longer that's up there at that, and this war in Iran is not going to help oil costs or energy costs. So this continuing is that's going to become increasingly inflationary, as is this. Materials. We do have industrial still kind of flirting in there, and then we have healthcare. You can see what's picking up. Utilities. What else? Staples. It's not looking. It's not. Yeah, Steven's like, what I don't like. Yeah, there's a lot not to like, unfortunately, in this sector rotation situation here. Let's drop down to 66. What do we see? Energy at the top. Materials at the top. That's the cost of energy, the cost of building, buying, moving, right? Like, we don't love that. We still have industrials. That's our sector, growth sector of hope. Then we have Staples. And who's rushing to join the fray? Another defensive. Helps when you're in energy stocks. That's right, Doug. Absolutely right. We've been seeing this for sure. Probably should have added more energy stocks and material. We added some material stocks back in. I tend to go XLE personally, rather than buying individuals, but certainly. Did I take a picture of that and post it? Let me just try again just to make sure. Okay. Let's put it in. Whoops. Let's put it in here. And let's go finish up on the 22. What's coming down the pike? We've got energy, utilities, staples, industrials, materials, and healthcare down below. It's just not great. There's just not a lot of bullishness in there. We've got industrials, and industrials is probably benefiting from the fact that energy and materials is so strong, as much as it is representative of a growth mindset in the market. What did I just take a picture of? The 22 day. That's exactly what I wanted to take a picture of. Okay, Oracle, do your thing. And we will go talk about in XLE, Doug. Yeah. That's it. That's a great way to do it. Energy at the top. Utilities at the top. I mean, it's just more of the same. There's one little shoot of hope right there above market averages is communication services, and lo and behold, we actually have been looking at Google for a potential position there. I'm not going to go search comm services. I'm going to trade probably Google as a representative of that. And if it's going to go, Google's going to take it there. So, yeah, this is certainly concerning. Our score from a group, my score, was a minus 0.25. Oh, let's go back. I kind of feel like that could even go to a minus 0.5. No, well, yeah. With utilities joining, I would be cautious on everything tomorrow. Everything, yeah. Oh, I'm telling you, I'm leaning towards a minus 0.5 on this one. Has anyone gone there? Steven's at a minus 0.75 already. I don't think that's... yes. With this joining like that, if this hadn't jumped the way it did, but that joining the fray, I am going to move mine as well. Solidarity. Back down. Minus 0.5. I don't see how the Oracle's at a 0. Let's see if it maintains that stance. Still mixed, not growth. Mild defensive. Last week, this warrants a move to... Okay. So, again, consistency. We're all kind of thinking, hey, this looks a little worse. Minus 0.25. Oh, an old friend and an ancient enemy. I like that. Last week, defensive bias expanding. Not a minus 0.5 for the Oracle yet because industrials and materials still lead. It's not a full defensive takeover. Staples not exploding higher. No clear Dow-only dominance, but growth remains suppressed and defensives are strengthening. Defensive sectors like utilities and healthcare, strengthening technology and discretionary continue to lag. It's a defensive tilt. It's not balanced or risk on. I agree. No. Do you feel like it says that they are? Leadership remains concentrated in industrials and materials. I mean, this is at a minus 0.25, so clearly it's not seeing that as bullish. A continued acceleration in utilities and staples would warrant further downside. A rotation back into discretionary would be, yeah, or financials. We could add financials into that mix as well. Comm services, right? So I think that's reasonable. Let's go move on to volatility. Then we can get to our watch list. The VIX. VIX. Get a picture of this. And this week's chart for analysis. 030126. Let's see. Go. And let's go talk about it ourselves. Yeah, so for me, I think that my score is going to drop because we had this. It turned and crossed. It did get above this candle here. Didn't close above that high, but I don't need it to go that much. This is concerning that this continues. This is a clearly, and then you can see that if this continues, we had a little bit of a stall here, but if this accelerates, it accelerates back into this area. And that's concerning if we saw that. So for me, this was enough to warrant a drop. That higher low is ongoing escalation. So I am going to drop mine to 0. I am a 0. Neutral. Neutral is about as good as I can say at this point because this thing is definitely showing a build, right? It's a build-up. So, yeah. Thoughts? Where's everybody else find themselves? Let me know. What it looks like for you. Okay, let's go see what the model says. No change. Another intra period above 21. Fear remains structurally higher than the December lows, and moving averages are beginning to turn upward. The market has not produced sustained closes above 20 or acceleration towards persistent caution but not expanding panic. Score remains 0.25. Continues to operate in a higher range with repeated 20 plus probes, but without follow through expansion. Fear is active and present yet not intensifying week over week. Okay. What would change the score? Weekly closes above 21.22. No retracements. 2 weekly closes below 18. All right. Risk sensitive, but not disorderly. Risk sensitive, but not disorderly. My VIX went to 0 because a spike starting to appear in the weekly. Fair. I went to 0. I'm at a 1.5. ChatGPT kept the Oracle. Come on, I got to get my nomenclature right. The Oracle kept it the same, 2.75. So actually, you can see we both dropped just a little bit. I dropped 0.25. The Oracle dropped a half a point. We're a little closer. Is anybody below 1.5 or above 2.75? I want to see where's the distribution. Stephen and D is a 2. He's right in the middle. Don joined me, and so Don's got a confirmed validation at 1.5. I think that makes a lot of sense because that's exactly where I am. In fact, if I had to say it, 2.25, but not happy with it. It feels, okay, Gabe, that's interesting. Gabe's like, I scored it at 2.25, but I'm okay, and your AI says 1.75. I love this. I mean, clearly, if someone's like, I'm bearish, it's like, I don't know where you're getting that. Even straight neutral at a 0, it's like, there's enough strength, underlying strength across, multiple analyses that it's hard to put that. Now, if someone's like, I'm a 6, I think this market's flying, you'd be like, where are you getting that? Right? Is kind of where we go. So, yeah, I think that this makes a lot of sense. Good range. What does that have us do? Show caution in how we trade and the risk that we take in the markets, the sectors that we consider, right? Things like that. Okay. Let's go build a watch list. We know what's coming this week. Oh, one more thing. I almost forgot. We are on to section 5. We're on the second half of the trading plan outline. We just finished risk management. And we are now on to section 5. Whoops. Routines, daily routines, before, during, after. Weekly routines, those are the most important. Eventually, you might put together even some monthly and quarterly routines. It's more your back office stuff, record keeping, trading rules, things like that. Let's keep doing it. Build that plan. Everything above a 7, that's the first, right? That puts you at a 56 of 80 possible points. That's where we're trying to get to. And now this week's watch list. Remember next Sunday. Oh, daylight savings. Okay. I'm pretty sure that the platform, though I don't know how much I trust the platform, does it all automatically. But yes, thank you for the reminder, and I will make a note to continue that. 3/1/26 watch list. Let's go. Yeah, I'm excited for spring. Alcoa. I'm putting Alcoa on my list. It's kind of done a little sneaky little reversal. It's basic materials. We know basic materials looks pretty strong right now. And I'm gonna say Apple's less inclined on my list. It tried to go, couldn't even get to the old high, got pretty smashed on volume. I'm gonna hold off for now on that one. Technology. I'm gonna say yes to Archer Daniels. Staples. I'm going to say yes to Applied Materials. If I'm going to do technology, it's going to be something like this. Just made a new high, pull back. We have some great looking moves to orient off of. Absolutely, I want to find a trade this week on that. AMKR. AMKR is one that's on and is in a hiccup, and we're looking to see if this thing can stabilize. It's got to move into its next, right? Like you can see, we had a pretty good start, and we're like, hey, come on, and then just swept by the market. That's the market that we're in. Okay, let's keep going. Amazon, no. I'm going to keep AMKR on my list because it's already there. APH, no. ASX, I'll say yes. Same kind of a thing. This thing just made a new high. If it pulls back, holds a support level, and starts to turn, it did the same kind of thing here. Went up, pulled back, held it, and then it popped. It did have earnings, but still, it's got a great trend. AXP smashed down. What was the news? Someone said there was some news on this, I thought. Does anyone remember? Down 8% on big volume. Double volume. Time and a half. BABA, no. Bank of America, no. BCS, no. Look at all these that are just, right? It's not in good places. Budweiser, yes. Budweiser had a little consolidation starting to turn. Could be moving into a continuation trade. We move into a Heikin-Ashi and we think, if I can catch this thing in this range and put a stop here, knowing I'm going to tighten it, I might catch something tradable in there. That's one I think we'll evaluate as a continuation trade on Monday. That is a staple. What do we know people do in recessions? They continue drinking beer, if not even more beer. Citi, no. Caterpillar. So Caterpillar actually was a signal that we looked at, and then we're like, no, because of the liquidity issue. The spreads were just not tenable for a trade. I'm going to keep watching it, and we'll see if those actually improve at any point. Oftentimes when the volatility drops, you'll actually see better spreads as well, interestingly. That's another reason why you have to be more careful in a higher volatility market. The spreads naturally widen as the market makers move to protect themselves to some extent, and that's one of their self-defense mechanisms. CF still looks pretty good, actually. I'm going to say yes. A materials stock. Coherent still looks pretty strong. Pulling back potentially for another trade. Cisco, no. 2 sideways. Delta, failed. Some people held and started to get, and then it just fell apart. And you can see that second move. This one was just not right. It broke support back here. It did recover, and then it fell again. Tough one. That was a tough one. Diamonds, it's kind of slowing down a little bit. Dow Chemical. So this one was an interesting one because it signaled, held support, held the same support. I'm going to see if it can hold this trajectory, but I'm not going to give it a lot of room. But materials still strong. So it's like, is there rationale that makes sense to stay in this trade? For me, the answer is yes. I am still keeping it on my list. Ford actually looks okay. Not a great group right now. GE is strong group. Little consolidation. We'll maybe have something on our hands. Gold, maybe. General Motors. General Motors tried, and that's it for me. When it fails on the second attempt, Thursday or even Friday for sure, this one was a goner. I'm pretty sure I heard a lot of people say on Thursday they got out. If you're still in, be thinking to yourself, what's the rule then when you will? Because this one definitely broke support Friday. Even if you held Thursday, it broke support Friday. But remember that Thursday was a failure to hold the hiccup. I'm giving it a lot less flexibility here than it had here from a management perspective. Let me know if that makes sense. Wasn't a bad loss, though, I can tell you that. Did anyone close? How did it feel? Let me know. Google. I think Google is actually showing a potential for a hiccup. And I'm looking for that one coming out of this. That one definitely looks close to me. Goldman, no. Home Depot, no. HL. Defense, gold, silver miners might have a good week. Yeah, I mean, look, you can see that there's a little bit of, there's some bullish orientation. Possibly continuation trades. IBM is a definite no. Intel, I think Intel is a possibility. Newmont Mining, please. I'll put it in there. I'll forget if I don't do it now. There you go. Same kind of thing. There was some sideways, but starting to orient a little bit more bullishly over here. Definitely some defensiveness that springs from the Middle East conflict could perpetuate more of that money moving into the precious metals. We'll keep an eye on that. IWM sideways. Lumentum. It's a bullish stock for sure. Freight train. I'll keep an eye on that one. LRCX. I think LRCX actually has potential for a bullish trade developing here. MasterCard, no. Meta, no. Monster still looks bullish. Got through earnings. And I'm going to want to see. It was right on the bubble last time for its liquidity. And you can see it had a little hiccup, and then it made exactly the move we were looking for. So if this thing consolidates, I'll try again. Morgan Stanley, no. Microsoft, no. Micron, still in. I'm still in this one. If it holds this is now my line right around this 398. As long as it can hold above that, I'm going to see if it can catch one more bounce, and if it gets to 450 close to the March, I'm going to be getting a lot of time decay on that one right there. So this has shifted from a bullish swing trade into more of a time play, as long as it doesn't break back below this level that's already held. Let me know if anyone still has a piece of this with me. Still profitable. And the Netflix, the investors love that it's no longer in that deal. If it pulls back, there may be something there. New Holdings is a no. Nvidia is a no. Palantir is a no. You can see not a lot of stuff showing up down here. Rocket Lab, no. Ross Stores, yes, but it has earnings. I don't know. I'm actually going to leave it off the list for this week. RTX is a yes. That's a defense stock, as Doug said. That might turn into a continuation play. Silver, showing some bullishness. SNDK. Rationale on Nvidia, please. I'll go back. 2 heavy sell days, big volume, broken support, post earnings. Until this stabilizes, I think it's making a run right now for 171.5. It closed even still near the low. Now, if not, I still need to see stability. So for me, I look at this and I think this thing really hasn't broken that in months. And now we have, if anything, increased selling pressure. I need to see that dissipate before I do anything else. I love NVIDIA. I'd rather be bullish on NVIDIA. So Steven says it makes no sense. I mean, remember what we said. It doesn't have to make sense. That's the rule. It doesn't have to make sense. STX? No. SYY? Yes. SYY. I actually was looking at, so I'm putting that on my list. Interestingly, that one looks a lot like Bud. And we're looking at a continuation trade on this. So especially if I can get an entry somewhere between like 90 and 90.60 or something like that. If it opens down a little bit, which I think based on the conflict, there may be. We'll see. Or it may just take off. This is definitely one we talked about on Friday. If you were there, you saw that. If not, go watch the video to see that. And that will be at play on tomorrow morning, I think, for us. TJX, a little overextended there. Tesla down. TSM. I don't know. It really sort of just struggled on this last bounce. I'm going to hold off on TSM. Vail already made its move. VOD. VOD looks like it could turn into something. Communication services still had a little bit. Western Digital, that could turn into a trade. Lastly, but not leastly, Walmart. Walmart's back in line with where we actually put a position on. So this looks okay and ready to go. Let's see if that thing can re-energize. Always a bit of defensiveness to Walmart, so Walmart's on the list. And already trade on. Yep. Okay. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. I've got 20 on the list, but you can see not a lot of technology, a lot more industrial, a lot more defense-oriented, so it's an interesting shift in our watch list as well. Make sure you get a little work put into Section 5 routines. Once again, I love you guys so much. I like to send you lots of emails to express that. No, I'm sorry again. I'm gonna work on it, and I'm gonna tell you that that we're gonna try again to get it on. It's crazy. I have no idea. We'll figure it out. AMKR. I'll go back. AMKR for me is I'm holding support and looking for it to bounce. Held support, moved up a little bit. Let's see if I get a little catch on a hiccup. It wasn't enough for me to close. Vladimir, after we caught a little bit, I'm like, hey, the buyers want to come in. Let's see if they'll do it. That's where I am. Oh, it's good to see everybody. SIL. Silver miners. The miners look like it's tough. You can see it's overbought. We just had 8 days in a row. We're at the old high. Could it still go bullish? Yes. Would I be looking for a new bullish trade in this situation? No. All right. Thanks, everyone. I think I actually talked about that. You might go look at the. I think we talked about splits in Friday. If you pull up the video in that first 20 minutes, I think we did. Anyways, enjoy your Sunday, all indeed. Thank you, Gabe. Thanks, everyone. Have a great rest of your day. See you tomorrow morning. As always, happy trading.